How you doing, friends? It is the final hour to expiration, and this is our 25th instance of this trade. Now, we haven't always taken a trade. As a matter of fact, this week so far we have 3 days in a row where we have not taken a trade. Will we take a trade today? That's the question. Now, we are currently, if you go back and look at all of our record here, as we were calling these trades, we are about 16 out of 20. So in other words, let's see, is that correct? Yes, that is correct. 16 out of 20, so that means that we're at about 80%. That's our record so far. We have about 5 of those trades where we came close to a pin. Now, we employ out-of-the-money symmetrical butterflies so that we can get the kind of risk to reward that we want. And so we have a very small risk to very large reward, so a potential reward. And a pin trade is where you end up almost near the very maximum profit potential of that butterfly. And so we've hit that within, I'd say within 5 or 10%, about 5 times. One time as much as 800% return on our trade. And this has produced a positive expectancy. Now we're doing this trade, this trade here, the final hour trade. It's not our normal trade. Our normal trade is to take a trade a little bit earlier in the day and play that final day of expiration on options on the S&P. Specifically with the SPX. We used to delve into the E-mini futures, but we found that going a little further into the day did not have any appreciable premium decay and gave us a higher rate of return because we have a smaller window of time where we can predict where price is going to go. And as long as there's enough volatility in price, enough movement, we can get the kind of risk to reward that we need in our trades. And we use volume profile to create the market structure, and then we analyze that, come up with our behavioral analysis of where we think price is going to go, and then we model that with our trade and place it in such a way that we intercept where price is going to go. And we don't have to have a very high win rate in order to be spectacularly successful. Now, so far we've been doing 80% on this final hour trade, but on our normal trade, you could be a 40% winner and just totally kill the market with your performance. So it's got a really high long-term expectancy, even with a very low win rate. Now, we tend to be a little bit above 40%. We're normally in the 50 to 60, in as high as 80% return in some markets, but I would say on average probably about 65%, 2/3, and with about between 150 and 200% return on our risk. So if you do the math, you can see that actually is quite impressive. Now, there are times when it's really difficult to try to pick direction, even in that small sliver of time. And even in this, this final hour, we're having our difficulties because of a lack of movement or just general, at the end of the day, the market just seems to get fatigued and decides not to go anywhere. And so we haven't had that opportunity. Now, today we had a pretty good trade. Let me bring this in, and I'll show you what that trade was. All right, so the arrows that you see are after we've done our volumetric analysis using volume profile, we come up with what we believe are the scenarios for today. And you can see these arrows were here prior to the market actually moving up. And you can see that it was decidedly a bullish day for us. So now the real test was, well, where would we put our trade? And I think most of us chose a trade that would reach the T0. The T0 is actually one of the volume nodes that you see in a larger time frame, and we felt that would have been a good target. and I think most people had their trade up there. I think a couple of people chose a bearish trade. I'm not sure why, but I think overall most people are looking at a bullish trade and coming into this area. Now, once we were in this area, the actual center strikes that I chose, anyways, was at 40.80 and about 20 wide per side, and that gave us. We got inside of the profit tent for a little bit, and it provided a nice little profit. It started to move out, and I exited my trade. I think others had exited it as well. Some may think, maybe they want to give it another shot and let it hang on there. But that was our trade for today, and it was a successful trade. So now we're in this final hour, and we have a couple of elements or market structural elements that we have to consider, and what the market has done so far today. So we've moved up rather sharply, and this move up here goes against all sensibilities. And I feel like we're in this kind of opposite world that we used to play last year when we were in the quantitative easing melee. And that is where, when the market is pegging or flashing one thing, the market does the opposite thing. So in other words, in the opposite world of quantitative easing, anytime the market showed promise that it was going well, the market would be up, worried that the Fed might pull back their quantitative easing. Of course, they never did, but there was always that worry. And I think the Fed would feign the idea that they might do that they might pull back. So the market would go down on good news. On bad news, it would be the opposite. The opposite meant that the Fed would continue their quantitative easing, and the hopium would continue to be injected into the arm of the market, and so the market would go up. So that's what we called opposite world. And then when the Fed decided to abandon quantitative easing because they felt that the market was overheating, of course they were at least 6 months to a year behind their evaluation of the market, which they always are. They're always behind, and always behind the curve, and always overdoing everything that they do. The market at that point said, well, okay, quantitative easing is up. We have to give up opposite world. Now maybe we have to reorientate the way we think. And we're coming to that conclusion. And now we're in a position where the Fed and the government have monetized our debt to such an extent by being late to everything that they have created an inflationary malaise. And that has been, piled on, or it has been accentuated by the fact that we had the pandemic and the war and other things. But the deed had already been done prior to all of those events, and that just sort of exasperated it, and they've continued with it. And yet they're going to still go ahead with their rate hikes, because the market likes that certainty. But all this time, they really haven't even started the rate hikes yet. Well, they have, but they haven't really stopped the quantitative easing. They're still, in fact, reinvesting maturing bonds. So that is still kind of a quantitative easing. So this whole idea of stemming inflation while they are still monetizing debt doesn't make any sense. Well, I guess it's the transition. It's you can't take a big tanker and turn it on a dime, I guess you could say. In the case of the United States government and the Federal Reserve, that same tanker must be about 15 miles long, So it takes them, forget turning it on a dime, man, you couldn't turn it on on anything. It's just incredible. So nothing really makes sense. So now we're getting to a point where we still have inflation. They want to raise rates. They've announced a rate hike of 50 basis points, which is not nearly enough when we have 8% inflation. We have a second quarter of negative GDP, so that officially puts us into a recession. No one can argue that point. We are in a recession right now. by the formal definition of that, and that's 2 successive quarters of negative GDP. That happened this morning. Yet the market went up. The market went up. Now that we're in a recession, the market went up. Why? Why could that be? Well, generally it's because the sentiment is at its lowest point in decades, maybe a century. I mean, it's really that bad. Inflation, all of this, it's as bad as it can get. Our inflationary numbers right now are as bad as they were back in 1923. I mean, it's absolutely incredible. So what should the world do? Rally. That's what you do. You rally. So I believe now we are back into opposite world, only for a different reason. It is so exhausting. What are we going to do? So we reached up to this market structure called T0. That was our call for the day. Moved up. We've made our profit. I would say that most of our members have probably taken that profit. I hope they have. And now it's starting to pull back. As soon as it started to pull out of T0, I thought, okay, that's it. I'm out of here. I'm not going to hang around in this party. Anything can happen. We could sit here. We could drop all the way to T1. I mean, who knows? That's a good 100 points or more down. That's the nature of today's market. I mean, we are in recession, right? I mean, that should be worth something. But anyways, that was the alternative path that you see with that cyan line that you see there, right here. This guy right here. That was the alternative path. Felt that okay, we would go up, and we definitely met that goal. And then come down. Now, where are we going to come down to? Are we going to come down to this LVN, which is highlighted by the green line, or into this vacuous area, this big volume well, where there's very little liquidity? Now, I think that, let's see, it's 3:30 right now, so it's not like we're going to go very far. But I think that what's going to happen here, now that we've left the comfort of this value node or volume node here, I think we'll come down to this LVN and possibly continue down. I mean, it's possible that we might do something like this, but I think that this guy here is more likely if we make it down to this LVN. So that would be my call. The market's just dragging along here. I'm serious that this could be another one of those days where it's just too close to call here. But that's going to be my call. That what we could do is we could put a very narrow fly right below the LVN, so it's very low cost. And then if the market does move down through it, you could take, the pass-through profit. Of course, while I'm speaking of this, the market seems like it wants to go back up into T0. So let's see what happens. Let's zoom in on this. Maybe we get a better picture if we zoom in 3 times here and see what's happening. Let's go to a 3-minute chart and really get close up with this. There we go. All right. Yeah, look at that. Now all of a sudden, all of that I talked about, maybe this case right here is the case. Maybe we go back up into here. Now, if we look at the options chain over here, now this was the trade that we had on before. And I took profits when we were right in here. All right, so it was a nice trade. And let's take a look at the options chain. Now you can see on the call side, the volume of the options, all the different strikes are nearly double that of the put side. So you have to imagine that this is where the market is thinking that we're going. We're going to the call side or up. So the way the way Thinkorswim is situated, down is actually up in price. Up is down. So Thinkorswim is in its own sort of opposite world. And, we have some strikes that seem to have some gravitas to them on the put side, 40.50 and 40.40, but not like over here on the call side. I mean, we have 40.70 at 22,000 and 40.75 at 32, and then 38 at 40.80. 40.80 was what we were targeting before with our trade today. This guy here, it was centered right on 40.80. That still seems like that's where the market wants to go. So let's go back to our trade here. So, and it doesn't look, it's not that far away. I mean, we're at 40, we're talking about 30 points, and we don't really need to get right to the center of that. So I'm going to say that, we put, instead of coming down here, let's abandon this notion that we're going to come down to this LVN and go bearish. The options chain just doesn't support that. Man, now I'm getting the feeling like we're going to sit here right inside of this limbo area. And we're going to go to a fourth day of no trade. Man, this is so frustrating. But that's okay. That's okay. We had this minor node here that got created today on the cruise up here into this value node. I think that we're safe to say that maybe. Let's take a look at that options chain again. You know, 4080 is 38, almost 40,000 contracts. Look at this up here, 4100 at 40, almost 44,000 contracts. What could happen is at the end of the day, we could just, move right up, get a little short squeeze going. I mean, that's in fact what I think has happened here on this move up here. That was a short squeeze. With all the negative sentiment, eventually that broke, and they found that once we entered this volume well, or this low volume area, that it was easy to move the market up. And as the market with the low liquidity moved up here, a lot of the people with their heavy-duty shorts on, because everyone thought the market was going to hell, started to get squeezed out. They didn't want to take the loss, so that sort of fueled this move up into the T0. And that was essentially the analysis that we had this morning. So, there might be a little bit of that left. I think that a lot of the shorts are out of the building. So what's going on here? That's a good question. What's the fight? Or could it be that we're heading up into a long holiday weekend, and a lot of the institutional traders have just decided to take off early? There's nobody minding the store. Could that be it? And where is everybody in the comments? We have Joshua. How you doing, Joshua? At 40.40, he says. He likes 40.40, which is just below the LVN here. But everybody else is, let's see. Everybody else is asleep at the wheel. So where is everybody in our group? Why don't you say hello? Say hello on the comments. All right. This is going to be my call. I think that we're going to re-enter T0, but I'm not willing to bet a lot. So I'm going to put on just a 10 wide that is right here, just above, looking for one of these really quick moves up. But I'm going to say right in the middle of T0, let's say at 40.65 or 40.70. 40.70. Let's do 40.70. All right. So 40.70. Oh, what the heck? Let's just go 40.80. That's where the action is. So we can reuse this guy here. Let's see what kind of. this up. 4080. We'll make it. Let's start with 10 wide. All right. All right. That would cost $1. Let's see. Let's see what that looks like. All right. I think that's a reasonable trade. 85 cents to make about $820. We're not looking to make that full amount, but if price just moves through it on say a last minute rush through this area, we can take profit as it's riding that wave, so to speak. And let's see. Right now it's fluctuating. It's really moving all over the place, but you could probably get that for about 80 cents. Let me see. You're just watching. I know that, I'm sitting here trying to manufacture a trade, and it's just, I don't feel comfortable with it. We've got low liquidity. We don't have really the kind of volume that we had in the past few days. I feel like most of the institutional traders have probably taken off already. They've driven us up this morning. We had that short squeeze. We got up to T0, which is really a minor value node, and left us hanging. And once that bottom, that grinding up stopped, I got out, took my profit, and now it's hard to tell what this market's doing. I mean, you got to watch this. This is some show. Watch the. It's just moving all over. What in the world is that? Have you ever seen anything like that? It's just the profit curves all over the place. The butterfly at expiration curve is all over the place. This is crazy. I don't know. And price really isn't even moving. It's just, hovering here right below the T0 node. This is about where I'm saying it will go. I think this is going to be another one of those non-trade days. That'll make 4 in a row. Oh. Wow. I think what's going to happen is that we're going to shoot right through this. So why don't we play that? You say, play what, Ernie? All right. I am going to put a trade on in another account here. I have to take it off screen because I can't. It's my Fidelity account, and if I showed you the screen, then you'd see there's no way to hide my account number or anything. We'll do this, and we'll put on a fly at 4080, 10 wide. So it's super cheap. Let's see if we can get it at a good price. Call. Got to set the expiration. 4080, 4070, 4090. We'll just do one contract. And they wanted $1 for that. I'm not going to pay more than $1. As a matter of fact, let's see if we can get 90 cents. If I can get 90 cents, I'll go with that. 90 cents to make $900. All right, so I'm going to put it in there. at 40.80, 10 wide. And then let's see if if it fills, that'd be great. If it doesn't, nothing lost. So I've got the order in. It's still open. And if I fill it, I fill it. If I don't, I don't. I'm not going to cry over it. Yeah, see, now the price is way up there. It's at $1.50, $1.40. It's all over the place. Here, I'll show you. It's like $3. What? Now it's at 80 cents. Who knows? I might get filled off of one of these crazy movements. Oh, you can't see. So hold on a second. I'm going to bring this over to another screen. And then there. Now I can refresh it without you seeing it. There we go. Yeah, I don't think I'm going to get filled. We'd have to move back a little bit, and I don't know if it's going to move back. Let's take a look at the... yeah, we'd have to do a little bit of a pullback to about here or so. Pull back to about right to 40.60, and then we could get filled. But I think what's going to happen is we're just going to blast right through here to end off the day. I thought we were grinding up here earlier today, about an hour ago. We were grinding, and then when it dropped, I said, I'm out of here. Because, I thought there would be a continuation of this, and then it just fell off. But now look, it's coming back. Who's running the asylum today? Is anyone short? How can you be short, Alan? Alan's asking, is anyone short? I don't know that I could be short in this market. Not after having this short squeeze. All the shorts have left the building. They're all gone. Now I'm waiting to see if I can get a backfill on my 90-cent trade. I mean, there's only 17 minutes left in the market, so it'd be a miracle if I get filled. I don't think that's going to happen, but at least the the prediction looks like it's going to occur. If time keeps on going on, there is still a possibility I could get filled, because we're getting this exponential decay, and we're still outside of the profit tent. So I could get filled, but I don't think so. Because look here, the debit of this trade right now is around $1.80. It's too bad I didn't get in. That would have, I would have profited nicely. Maybe if I chose to go for $1 or $1.10, I would have been up by now. This is crazy. Look at this thing. Just jump all over the place. What is that? Some people would say, oh, that's the gamma risk, Ernie. No, it's not. That's just, that's an illiquid market. That's what that is. It was plenty liquid earlier today, but now everyone has gone home. And I have a feeling it's going to be like that tomorrow, too. Okay, Alan, you're not short? Okay, good. We like that. I get the feeling that, most of our members went home, too. It's just, once we had the trade earlier today, that was okay. But this, this is all a learning process, too, with this final hour of expiration trade. We'll play it every day. This is our 25th episode, 25th time playing it. we've been able to get into some trades and had some very nice trades and very good success. And I guess part of the game is there are times when you just don't take a trade. You know, if you have no solid backing and the liquidity looks super weak, no direction, that's what you got to do. That's what you got to do. So that will be part of our... Well, we're all taking notes here, by the way. We're taking notes. We're jotting all this down. And this is all going to be part of our strategy going forward. I would like to get about at least 50 trades under my belt, under our belt, our collective belts here in 0-DTE.com. If you want to try out the service, go to 0-DTE.com/try. You can participate in this final hour trade without even joining, but I mean, you know, you wouldn't really understand what we're doing behind the scenes in terms of our process and everything, and you wouldn't have access to our other trades, which are generally very nice, very, very good trades. Today was a good one. I mean, it wasn't super profitable. I made about, although when you hear, you know, I made about, let's see, I'll show you what I did. Where is it? All right. I think I can add it here. Let's see, add an image. How do you add it? There. No, that's not how you do it. Well, anyways, my trade today. Here, I'll just put it up as an image here, and I'll show you. And then we'll go to the screenshot. So my trade today was filled two positions at $3.65 and then got out at $5.30. So, you know, made $1.60 on two contracts at $320. So $1.60 on that. So that's, you know, about 40%. So it's not a huge winner, but by any means. I was up much higher. But then when it started to fall out of the T0, I had to evacuate. I could have gotten out at about $6.50, $7. But I thought the market was going to continue to grind up, and then it just stopped. But that's what it's doing now. Had I stayed in the trade, here's the rub. Had I stayed in the trade, I would have been profiting dramatically right now. But you know, who's to know when you drop out like that? You know, look at this. I got out right about. Let's see. I'll put a box where I get out. I got out right there when we started to drop. Right there. And had I gotten out here, you know. Look, that's where we are now. I would be right inside the profit probably instead of getting out at $5.30, I would probably be up around $8 or $9 right here. Easy. But, you know, how do you know that's going to happen? You don't. You anticipate that we're dropping out of the value node. It looks that way. And then it says, oh, nope, we're going right back. So at least it's doing. See, it's doing exactly what I said. It's going to rush through. You heard me call it. I said it's going to come up here and rush through this value node. Let's see if that actually happens. See, now if that trade had filled, then I would have had a nice profit, but it didn't. That trade right now is sitting at about $3. So it would have made $2. But that would have required it to pull back a little bit, and it never did. So I'm going to exit that trade right now so that it doesn't get... I don't want to take any kind of hit on it, so I'm just going to cancel it. So I don't want an errant trade to go off and then me throw $100 away. Because you never know what's going to happen here now. It's just too late. Oh, see, now we're backing off again. I really thought it was going to just ride right through. But again, you know, had I been in the original trade, had I not gotten chicken and got out, would have been able to ride this right through to the end of the day, and it would have been a nice profit. But that's okay. We're okay with that. Still did okay. We have 9 minutes to go. I know, you know, you're looking at this at the last 4 days of this show, and we've got nothing to show for it. We've got nothing but a lot of talk. Oh, coulda, woulda, shoulda. Only if it had done this, I would have done that. But, you know, the previous 20 episodes were, you know, good trades. They all came in. We had definitive setups. We got in, got out, made money. All except for 4 trades, and then they were small losses. Very small losses, because that's what we do. We take small risks for oversized profits, and then we have a spectrum of high returns that we can try to manage. So that's what we do. We don't manage our risk. When we put these trades on, the risk is defined, so we do not bother with it. We just, hey, we accept that that's our risk, and then we try to manage the profit. And with asymmetric trades, where you're taking small risk and large returns, there is a long-term positive expectancy. So I actually modeled that in Excel here, and so this is a model of the 0 DTE trades, and you can see I've got 3 different traders starting with different starting capital, one with 5,000, one with 25,000, one with 100,000, and then their relative position size. The kind of risk to reward that we take. So the minimum, the loser part, that's our that's the risk that we take, between $100 and $200 a trade. And then I lowballed the actual winning percentage or the winning amount down to 600, because let's suppose that we have a 20 wide. Obviously the upside could be much higher than this, but you know, on average we don't always get the upside. So I put a lower amount to be conservative, and I put in a very conservative win rate. And even with that and a randomized result, you can see that all of the scenarios make money with relatively small drawdown. You can see for the large account, only 4% drawdown. For the mid-size account, only 5% max drawdown. And for the small account, only 8.5%. Now that's this instance. That's this instance. You know, I can change this. You know, if I just put another number in here and then change it, it just recalculated a whole new set of data. All right, now this time the drawdowns were very different and the results were very different. So I can change that again. Let's try a different one. All right, so here's So this is looking at 500 trades, so simulating 2 years of data. So every time I calculate the new set of data, it comes up with a whole new 500 trades and then recalculates everything with these parameters. Now I could go all the way down to, say, a 45% win rate, and you can see that I still have a positive expectancy. So even if you're only winning less than half the time with the 0 DTE strategy, and basically this is taking into account our probability of touch on trades and so forth, and you still have a positive expectancy. Now there is some times here on this bigger account, it's easier to see that there are times where you go sideways for 10, 20 trades. And then other times where you take off, and then small drawdowns too. If you were to look at the data, that's way over here on the left, you can see that if you look at the red, you see sometimes you have a lot of red trades in a row, and then other times you have a lot of, but the red trades are always capped at a small amount, and the black winners are always much bigger. Not always, but sometimes. I mean, here's a black trade, it was 0. Here's one that was only 4. But overall, in the long run, you have this slow creeping upward, grinding upward type of curve. And so that's the nature of the 0 DTE, our method of trading 0 DTE, not other people's method of trading it. Other people's method of trading it is with high probability trades. They actually have a negative expectancy. So relatively small drawdowns, very little volatility in the equity curve, excellent profit factors, not fantastic, but good. Excellent average win to average loss. Here it's over $2. So for every loss, $1 loss, you have $2 of wins. So that's good. And that's with a very low win rate. There are some times where we have win rates that are, as high as 65%. Now that's just, if we could do that all the time, it would be unbelievable, right? But we can't do that all the time. So I think, 52% is probably very realistic. And even here, you're still doing very well. If we take wider trades, if we brought this max win up a little bit to maybe 700, and we took the max loss maybe to 225, that would give us a slightly different look, right? So that would imply that we're taking wider spreads and trying to gain a little bit more higher probability trade. So even if we went down to 45, what would happen if we went to 45% on this one? Still positive expectancy. Much bigger drawdowns though when you go to there. So this modeling really tells us, what should be the range of our risk to reward, and what's the optimal risk to reward. All right, so yeah, well, we fell out of there. We went up and then down, right back where we started. Let's see, we started today right here. We started today right here, and we ended today right there. Look at that. We went nowhere today. Nowhere. And that's what happened on the last few days. We started and we were within just a few points of where we ended up. So Hans wants to know, where can I find the trade from today? There was I didn't post a trade. I didn't post an alert. What I did was I provided that guidance. So, well, there's the bell. I'll answer your question in a little bit, Hans. All right. So that's where we ended up. No trade. No trade for the fourth day in a row. So here we go. We have 25 episodes, 4 no trades. Actually, I think, there's a total of 5 no trades now because we did have a no trade earlier on about several weeks ago. So 5 no trades, 20 trades, 16 winners, 4 losers. Of the 16 winners, about 5 of them were high triple-digit wins or near pin trades. So still, an 80% win rate. We stay out of trouble off of days like today because they simply don't give us our range. They don't perform the way we want. Liquidity is down, and so there's really nothing to do. So far, I'm really liking this final hour of expiration trade. It's interesting. If you can take the fact that sometimes you don't take a trade, that's the way it goes. And, had we had this kind of knowledge back in January where we shouldn't have taken the trades, probably wouldn't have taken those trades because liquidity was super low in January. And that was overall a losing month for us, but one of the only losing month that we've ever had. And it really wasn't that big of a loser. It was like, tiny loss because we only take tiny risks. So, well, there you go. Another final hour of trading in the bag without any final hour of trading because the market just did not perform the way we would like. Not giving us the kind of risk to reward that we want. See, it really comes down to that risk to reward. If we can't put on a trade where we have at least a 1 to 5 risk to reward, we don't bother. And we never even came close to that. I suppose it would have been possible. I was within a few cents of putting on that super narrow trade. If that had caught, I was within 10 or 15 cents of catching that, but I just came in late. I wasn't willing to pay $1.15, so I put it at 90 cents. Had that caught, then I could have made a buck or two, but that's all that I was willing to risk. So, again, that's the kind of decisions that we make here. Let's see. Stock option pro. I just made 1.8K on an iron condor and then put zebra in the last. Good for you. Not part of our strategy. An iron condor, if you could, I suppose, if you knew that price was going to just hang out in one spot, but that would also have given you tremendous risk, and had it run outside of your condor, you would have been hurting big time. So just keep that into consideration. Greg Rubin says, it would be so helpful to see the trade staged or active in the chat as you say it, in case we missed the moment. Well, that's why you have to watch. I stage everything here online. I can't do everything at once, I either broadcast and do everything here, or I do it inside of the room. That's why I tell everybody, go to the broadcast. Let's see. All right, that's it. No more comments. I want to thank everybody for showing up. We'll have one more of these this week, and then it's a long weekend, and then we won't see you until Tuesday. So hopefully we get a trade tomorrow before. But I'm telling you, if liquidity was bad today, it's going to be much worse tomorrow. But it'll be worth just watching the market and seeing how it behaves prior to the long weekend. So there you go. Peace to you all. If I don't see you, have a great weekend. Fading to black. Take care.